Okay, so let's unpack this. We're looking at a broker today, Liquid Brokers. It seems really designed to make trading easy to start, but our sources are definitely flashing some warning lights.
Yeah, definitely.
Yeah.
And our mission here is to sort of weigh that temptation against the potential turbulence,
Exactly. So where do we start? They've been around a couple of years.
About 2 years, yeah. And right away, there's this kind of structural um, paradox. They seem linked to pulse markets in Australia, which sounds established.
Right.
But Australians themselves are specifically blocked from joining liquid brokers. And critically, the source material stresses it doesn't have its own full regulatory license yet.
That missing license, normally a huge red flag, right? But Liquid Broker seems to counter that with just extreme accessibility.
Totally. You, the listener, can apparently start trading with just a $10 deposit.
$10. And withdrawals start at 20.
It's incredibly low. It makes you wonder, doesn't it? Is that low barrier sort of masking the potential long-term risk of an unlicensed platform?
That's the question. It certainly lowers the initial hurdle.
It's clearly their main angle. But looking deeper at the account types, they do try to cater to different traders. You've got your standard options,
Okay.
a VIP account, presumably for, larger traders, and also a swap-free account.
What about this no commission ECN account? The source mentions it, but then immediately says it has small fees. That sounds a bit contradictory.
Yeah, that can definitely trip people up. Usually with an ECN account, you're getting tighter spreads closer to the raw market price.
Right, okay.
So the no commission part means they don't charge a separate fee per trade. Instead, they make their money through those small fees, maybe slightly wider spreads than pure ECN, or perhaps fees on overnight positions, the swaps. It's just a different fee model, not actually free.
Got it. Now, platform-wise, they seem pretty flexible. It's not just MetaTrader 5, is it?
No, exactly. They offer MT5, which is kind of essential for many traders, but they also have their own platform called Liquid Charts. And the interesting thing there is that it's built to work directly with TradingView.
Oh, okay. That's a big plus for people who use TradingView for all their charting.
Definitely. If you rely on TradingView's analysis tools, being able to trade right from there without switching platforms is, well, it's a major convenience.
And the market range seems broad, too. Forex, crypto, stocks, indices, commodities, kind of the whole spread.
Yep, a full range. They also mentioned the standard security things, encryption, two-factor authentication, plus demo accounts and monthly trading competitions to get people engaged.
So lots of features, lots of markets.
All sounds good, but this is where we really need to circle back to those initial warnings from the source material.
Right, the platform features and even how fast crypto deposits go, and apparently they're instant.
That doesn't guarantee security or that your money comes out easily.
Which brings us back to the biggest caution, that pending license situation.
Exactly. The source is very clear here. Without that full regulatory approval, there's just inherent systemic risk. There's no top-level body ensuring funds are segregated properly or handling disputes in a standard way.
So the convenience you get up front is potentially offset by a lack of fundamental regulatory protection?
Precisely. And then there's the leverage they offer, which adds another layer of risk.
Ah, yes. The 1.500 leverage for professional clients, that's way higher than what most big regulators allow, isn't it?
It is significantly higher. The source warns users to be extremely careful. That kind of leverage amplifies everything. Small market moves can lead to huge losses really, really fast.
So it's likely a tool to attract high-risk traders, but it needs serious discipline.
Absolutely. Utmost discipline.
And finally, let's talk about getting money in and out. You said deposits can be fast?
Crypto deposits, yes, reportedly instant. Bank transfers take a few days, which is normal.
But withdrawals?
That's the bottleneck highlighted in the source. It warns that withdrawals can be unpredictable and sometimes take a significant amount of time. Speed going in, but potential delays and uncertainty coming out.
Okay, so pulling this all together for someone evaluating liquid brokers, the advice has to be pretty specific given these issues.
Yeah, it's not just a simple start small. The real advice from the source seems to be use that super low $10 entry specifically as a test run.
Test the platform, sure, but more importantly,
test the withdrawal process. See how reliable it is, how long it actually takes to get your money back out. The strong recommendation is not to commit any serious funds until you've personally verified that withdrawal process works smoothly for you.
that makes sense. Test the exit before you fully commit to entering.
Exactly.
Which brings us nicely to our final thought for you, the listener. Liquid Brokers seems to invest in user-facing tech security like encryption and 2FA, which is good. Yet that foundational operating license is still pending.
Right, the core regulatory piece is missing.
So how should you weigh that? The immediate convenience, the slick platform access with MT5 or liquid charts integrated with TradingView versus the, let's say, long-term structural security that only comes with full official licensing. That's the real trade-off you need to think about.